You're watching Chairman's Briefing, and I'm Rachel Lee. This episode is brought to you by Dryden Gold. Let's get started. President Donald Trump abruptly reversed course on his sweeping tariff plan on Wednesday, announcing a 90-day pause after just 1 week. While Trump denies market reactions have influenced his decision, his economic advisors had raised serious alarms about an unusual and dangerous bond market pattern. This pattern, which is rising bond yields during falling stocks, signals severe loss of investor confidence. It creates a dangerous triple threat: tariffs driving up consumer goods, higher mortgage and credit card rates squeezing households, and increased business borrowing costs, which hampers expansion. Normally, falling stocks push investors towards safer treasury bonds, lowering their yields. But this crisis saw the opposite, suggesting that investors have feared both inflation from tariffs and growing government debt. Treasury Secretary Scott Bessent and the Commerce Secretary Lutnick reportedly presented these concerns to Trump before his reversal, although the president maintains that his decisions reflect a negotiating strategy rather than a response to market pressures. Gold staged a dramatic comeback this week as President Trump's surprise tariff suspension electrified financial markets. The precious metal recaptured over $100 per ounce in a single trading session, which is the largest one-day dollar gain since March 2023. Now, the market whiplash represents the latest chapter in a turbulent week for investors. Gold prices initially plummeted $192 between April 3rd and 8th after Trump announced plans to reshape the 75-year-old global trading system with aggressive new tariffs. That announcement triggered days of intense selling pressure across all major asset classes. Then came the unexpected reversal. Trump declared a 90-day pause and substantially lowered the reciprocal tariff to 10%. Treasury Secretary Scott Bessent clarified that all countries except China would return to this baseline rate, significantly below previously threatened levels. The relief sparked an immediate 3.39% Tuesday rally in gold. Supporting this momentum, the World Gold Council reported that first quarter ETF inflows reached 226.5 metric tons, which is the largest quarterly increase in 3 years. Copper prices have plunged 20% from late March, meeting the technical definition of a bear market. This is when prices fall at least 20% from recent peaks. Now, investors have been selling the metal for the past week as tariffs fueled concerns over a global trade war and a potential economic slowdown. Freeport Mac CEO Kathleen Quirk delivered a stark assessment at a conference in Santiago. Quote, "We cannot ignore the fact that a trade war could cause people to not invest, to not buy, and to change their patterns and affect demand. This persistent decline validates French banking giant BNP Paribas's earlier prediction that copper prices would collapse as the rush to ship metal ahead of tariff implementation subsided." Copper and metals overall are under pressure from deteriorating sentiment, but there's also speculation that the current trade policies might benefit the mining sector long-term in a paradoxical way. Increased domestic production incentives, reduced regulatory burdens, and potential infrastructure spending should all create a more favorable investment environment. Now, this shift, combined with growing demand from AI tech, might ultimately strengthen copper's fundamental position despite today's market fears. Dryden Gold has announced the discovery of a new zone with substantial visible gold at their Aurora project. This intercept represents the most significant gold discovery in the company's exploration history to date. Now, according to the company, this finding provides further evidence that the Dryden district hosts an Archean lode gold system, which is comparable to the historically productive Red Lake, Kirkland Lake, and Timmins districts. This new mineralization occurs in a hanging wall structure, which is approximately 80 meters from the main Aurora target zone, suggesting the potential for multiple parallel mineralized structures, a characteristic which is shared with the prolific Red Lake mine. CEO Trey Wasser characterized 2025 as a pivotal year with drilling planned across multiple targets and consistent news flow expected through fall. Dryden's 2025 exploration program is fully funded. Mid-tier producer Wesdome Gold is expanding its Ontario presence with a $40 million acquisition of junior explorer Angus Gold. The strategic move quadruples Wesdome's Eagle River land package to 400 square kilometers along the Mitsubishi Lake Greenstone Belt. This consolidation targets at least 3 mineralized trends, including zones with recent high-grade intercepts of 48.7 grams per ton gold over 1.5 meters. Wesdome CEO Anthea Bath called it a highly logical tuck-in transaction, which refers to a complementary and smaller acquisition that fits neatly with existing operations. The move aligns with Wesdome's regional consolidation strategy while leveraging existing infrastructure at its operating Eagle River underground mine. In a bold move to capture the full potential of its crown jewel, New Gold just paid $300 million to buy out Ontario Teachers' Pension Plan's stake in the new Afton mine. The deal eliminates the 19.9% free cash flow interest that the pension giant held just as the copper gold operation enters its most promising phase. Now, the timing couldn't be better. Fresh reserve calculations have extended New Afton's productive life to 2031, with metal reserves jumping by over 13%. To fund the purchase, New Gold structured a gold prepayment arrangement worth $100 million, delivering a set number of gold ounces over 12 months in exchange for upfront capital. Zurich-based bank UBS just issued a clear message to investors amid ongoing tariff turmoil. In a note to clients, UBS said, "We think silver prices below $30 an ounce are unlikely to last over the next 3 to 6 months." UBS maintains its forecast that prices could surge to $38 in the second half of 2025. The recent pullback stems from a broader risk-off sentiment in global markets, driven largely by President Trump's trade policies, triggering a significant stock market correction. Unlike the severe drop during the COVID-19 pandemic, UBS expects silver's current decline to be temporary. Their analysis points to continued investor demand, potential Federal Reserve rate cuts, plus a weakening US dollar, all creating perfect conditions for silver to appreciate substantially. Mexico's President Claudia Sheinbaum is sending mixed signals to the country's mining sector. Now, some permits are finally moving forward after years of delays under her predecessor. Yet, Mexico has simultaneously raised mining taxes and maintains a ban on no new concessions that could deter $7 billion in potential investments. Meanwhile, 2 exploration companies are pursuing $1.5 billion in international arbitration claims over lost mining rights, highlighting ongoing tensions in the country. Mexico's mining chamber, CAMMEX, projects that investment will plunge by $1.2 billion this year to its lowest level in a decade. Chamber President Pedro Rivero attributes this directly to the continued ban on new mining concessions maintained under both administrations. Despite these challenges, recent acquisitions signal some renewed confidence, including Kerr Mining's $1.7 billion purchase of Silvercrest and continued exploration commitments from companies like Vizsla Silver. And there's your briefing for this week. If you're not subscribed yet, please do so before you go. I'm Rachel Lee, and we'll see you next week.